Good afternoon, everyone. Thank you for taking out time this Friday. We've come to a very exciting webinar this time, and we wanted to have something in relation to the global markets, how it's going to affect our Indian economy, how it's affecting our Indian economy and investors. Well, how we'll take through this presentation is something like, for the first couple of minutes, I'll take you through what we are for this, basically for the new participants who's joined and are getting introduced to hBits. So something about hBits for, I guess, say 3 or 4 slides. We have Mr. Sameer Bhandari with us. Just to give you a little brief introduction about Mr. Sameer Bhandari, who's a speaker expert. Well, just to let you know, he's a chartered accountant, batch 1987. I am batch 1989. From 89 to 96, he was with part of Bank of America, of course, in Mumbai and Hong Kong, both locations. From 96 to 99 September, he was part of UBS Singapore. He was the managing director over there. From 99 to again 2008, he was part of JP Morgan Bank Singapore. From there, he moved to Lehman Brothers, which was further taken over by Nomura Securities. He was actually a co-head of sales globally. So having such a background of very diverse, functionality towards fixed income and equities, we have a speaker with us today who will actually take you through what is the current scenarios of markets happening and how it's going to affect us in Indian economy and for our investors. Well, before that, I'll just take you through, of course, Mr. Shiv Parekh, our co-founder, so our founder and CEO of hBits, Howard graduate, Stanford alumni. He's Forbes 30 under 30, Business World Disrupt 30 under 30, 2022. Just to give you a very great news and exciting news, and of course, Sameer, you're there. How exciting is it that we have received a SEBI license, which we were actually talking about fraction ownership. Now it is SM REIT. So it's one of the great milestones which we have achieved at hBits. Congratulations to all of us at hBits and to the entire hBits investors and community with us. Just a little bit about us. We have overall 500 crores plus AUM, 200 years of cumulative experience. Well, we have as well a backing of one kind of a transaction which we have done as a thing, which is successfully exiting a property at 17.54%. We have a pipeline of around 20,000 crores and of course 120,000 registered users. Well, how was it possible? It was basically with showing a particular milestone which I just mentioned. In this particular property, we had targeted IRR of 15.54 and we delivered 17.54. Well, yes, there are many more exits which we'll surely look forward to have soon. Let's see how the time goes by and look forward to that. Well, if we are, kind of building up such a structure, we need to always partner the right people around. If you look at the partners of us, so banking, we have ICICI Bank. For legal, we have Shardul Marshad Bangal Das, Wadia Gandhi, DSK Legal, Tri Legal, which are among the top 5 law firms in the country. Data and research, what are the kind of presentations which we show you for the property and everything? All the data is coming from CRE Matrix. It's all validated. Our technologies through Zoho, AWS, Deloitte, and as well as just to talk about taxation, which has come from Deloitte and PwC. Well, since we have, and we all were waiting for this particular time, and we have an expert over here. Over to you, Sameer. Just want to understand impact of global markets on Indian economy and investors, for investors.
Thank you, Abhimanyu. And again, a very warm welcome to all the investors on a Friday afternoon. So we are living in very volatile times and very, very interesting times. After Liberation Day, April 2nd, a lot of tariffs were announced by Donald Trump, which actually threatened and shook up the world economies. Europe and a lot of other regions which were very, very close to the US now suddenly feel extremely threatened. They actually don't know whether they're close to the US or not. Similarly, in terms of the wars which are going on, Donald Trump had promised that he would be stopping the wars between Russia and Ukraine. He would be making sure that these wars don't happen in the future. But again, nothing really has happened. But this has really roiled the global markets. Obviously, the global alliances have been broken. The supply chains have been broken. There are a lot of tariffs which have been slapped on China, and China in turn has slapped the tariffs. Obviously, this has impacted the trade, and trade has virtually stopped between US and China. Uh, Historically, also what we've seen uh, is the dollar is actually strengthened when the markets go through turmoil. But in this case, it's actually the other way around. We've actually seen the dollar weaken. We've seen the treasuries actually, the US treasuries actually getting sold off, and yields, the 10-year yields going up all the way from 4% to 4.5%. Now, obviously, these things impact pretty much everyone, since no capital market is really insulated. Interest rates in the US impact interest rates in emerging markets. They impact interest rates in Europe, and they impact interest rates in China. And I think it's very important to understand how these dynamics are going to work going forward, and what is the actual impact on India. What we've actually seen is people are actually questioning the US in terms of safe haven. Is the dollar, should they be in US dollar? Should they be in US treasuries? Earlier, these questions were never asked. In fact, there was any issues in the world, people would run to buy US treasuries, people would run to buy US dollars. But what we have seen in the few 2 weeks since April 2nd, what Donald Trump has called Liberation Day, it's actually the other way around. We've seen the dollar weaken by almost 3 to 4%. We've seen, as I mentioned, US Treasury yields going up by almost 40 to 50 basis points. Now, is this a new era? Is exceptionalism of the US actually over? And these are some of the things which we need to think about. What actually happens to India? Now, being just going through what's happening in India, I think India is being, people are saying that despite the tariffs, India is being treated as a hedge against future flux in trade. The Indian markets have outperformed the US and have outperformed some of the other emerging markets. And I think we in India are now today in a situation where we actually can take advantage of actually what's going on in the world. The US obviously is suffering. I mean, we have seen the equity markets in the US down almost 15 to 17% from the peak, and both around tech and the S&P. Whereas India, especially this week, we've seen actually the Indian stocks outperforming. I mean, the stock markets is actually up 4%. The interest rates continue to come down, and we'll talk a bit around the inflation. And it's again becoming an extremely positive story for India. Next slide, please. Now, why do we think this is actually happening? India doing well, US actually struggling. One of the main reasons has been it's a relatively insulated economy. It's a very large domestic economy. Only 12% of India's economy actually depends on exports. And if you see actually exports to the US, it's only 2.1% of GDP. And if you strip out pharma and oil, which doesn't have tariffs, it's only 1.7%. This is one of the main reasons why the Indian assets have continued to do well, why the Indian currency has continued to do well. India definitely has a lot less reliance on exports. And if you compare to some of the other countries, whether it's China, Vietnam, Thailand, and any of the Southeast Asian and the North Asian countries, you will see India's reliance on exports is a lot less. If we look at the stock markets, almost 4/5 or 80% of the stock market is actually owned by domestic institutions. So your dependence on FIIs is much less. And we've seen actually the SIPs, though they've actually slowed down, but starting to come back again, and the mutual funds actually have started buying. Secondly, what is very beneficial to India is a recent decline in oil prices. The oil prices have come down by almost 20%, and that actually helps India a lot. Just to give you some statistics, India imported $277 billion of oil in 2022, which accounted for 38% of exports. So you can imagine if oil prices are down by 15-20%, that straight away goes to the bottom line for India, which also affects inflation. I mean, as we can see, inflation has been coming down. Inflation now is down to 3.34% in March, and it's expected to fall further. The central bank has already cut interest rates twice, both by 25 basis points each. My estimate is that they could actually cut another 50 basis points going into the year end. So overall, it's a great, very positive interest rate story. It's a very positive inflation story. It's a very positive story compared to other regions in emerging markets. The tariffs have had very limited impact on the US economy. One thing we've also seen, and you must have read in the papers, that Apple actually shipped almost 2 billion of iPhones from India just before the tariffs were going to hit. And that's also one of the reasons the markets continue to do very well. So how does this then impact the real estate market? How does this impact REIT products? How does this actually impact the income yielding assets? Obviously, all these asset classes now become extremely attractive. Not only the equity markets have started doing well, but with rates coming down, with inflation coming off, we do expect the SM REIT product or the REITs and real estate products to do extremely well. In fact, just a case in point, I was actually visiting Bangalore and Pune, and there is so much of demand from the GCCs for commercial property. Rentals have gone up quite a bit. Absorption rates are very high. In fact, there's hardly any vacancy. In fact, Bangalore vacancy rates are 10%. Mumbai vacancy rates are 12%. Pune, it's around 13%. So vacancy rates continue to come down. Rentals continue to go up. And overall, it's just a very attractive place to actually be in. I mentioned this, that despite global volatility, despite the FII's earlier selling in India, India continues to be an extremely good spot, given that the domestic institutions actually control 4/5 of the investment. Next slide. So what are the opportunities in this kind of volatility? I definitely feel, and given the fact that we've just recently got a SM REIT license, the SM REITs actually become an extremely good alternative investment to park your money. And a few reasons for that. One is, of course, it's very stable income which you get. That's one. Secondly, the strong demand among commercial real estate and rentals going up. We expect capital appreciation of at least 6 to 7% on a yearly basis. That's second. Thirdly, the way the SM REIT product has been structured, it's almost like a tax-free structure where the rental paid is given as return of capital. So it's very beneficial in the hands of the investors who actually receive it, since they don't have to pay higher taxes. And finally, it's a very stable instrument, right? Why is it stable? Because it's backed by a real asset. Uh, you can actually see and feel the asset. You get quarterly rental income. It's typically a grade A property with a grade A tenant. It's regulated by SEBI. So unlike other earlier on, where fractional real estate was not regulated, today it's actually regulated by SEBI. So that's very good. And we do expect capital appreciation of 6 to 7%. So when I compare it to fixed deposits, or AAA bonds, or equity, which is much more volatile, we do feel this is an extremely good asset class. And since it's going to be listed on the exchange, and this is going to be on the main board exchange, either NSE or BSE, liquidity is going to be definitely much better. Next slide, please. I mentioned this about Indian real estate. I do expect Indian real estate to do extremely well, at least for the next 3 to 5 years. And why I say that, having had meetings in Mumbai, Pune, Bangalore, I do feel the demand is far outstripping the supply. And when that happens, not only do you see prices going up, you see rentals going up, and especially for grade A properties. So we do see this as an amazing opportunity for us to acquire extremely good assets and then showcase the same to you. Next slide, please. This we spoke about SEBI regulating us. Just a few more things. Minimum investment is 10 lakhs. We will have valuation at least once a year, if not twice. SEBI says that it should be once a year. There is a lot of transparency in disclosures. We have to be very clear around compliance. Investors have clear rights, as SEBI has mentioned. So it just becomes a very transparent instrument for investors. Finally, closing thought, we do think, given the macro trends, given the volatility in the markets, given that you need to diversify into alternative assets, we do feel that this asset class, the SM REIT and the REIT asset class, is going to be extremely good for your overall portfolio. So thank you so much. Let me pass it on back to Abhimanyu.
Thank you, Samir. And I guess, while you were speaking, I made my notes as well, which points to just further go and read about. Well, it surely, touched bases a certain, I should say fixed income part. I guess we should as well cover up probably in our following webinars. We should talk about FDs, bonds, and SM REITs. That could be the next topic which we can talk about. But yes, if anyone has questions, I'll request you all to please put your questions on the place, and we are able to, take your questions down. There's a question from Mr. Rajesh Nair. Samir, you spoke that this is tax efficient. Please explain this, as I understand that rental income is taxed at the base IT rate such that 30% or 40%.
Sure. So this is a very tax efficient structure, since the rental which is going to be paid to the investor is going to be paid as a reduction of capital. So giving you an example, suppose you invest 100 rupees in an asset and I pay you 8 rupees yearly. After the first year, your capital reduces to 92. In the second year, it reduces to 84. In the third year, it reduces to 76. If you sell your asset after the 3 years, say at 110, you will have to pay a capital gain of the difference between 110 and 76 at the long-term capital gain rate of 12.5%. It's a very tax efficient structure.
Indeed, just to add in a point over here, Samir, I did a basic calculation on 100 rupees, on the old structure and the new structure. Could be a basic bit point here and there. On 100 rupees itself, there was a difference of additional 9 rupees post-tax. So I'm just talking about this. If it is a crore rupees, it's like a 9 lakh rupees more. So I have a next question, Mr. Osman Kaleem. How about investing commercial space in a mall? Is that a good idea?
Well, we definitely will look at malls, but it's very important that the tenants in the mall are A grade, because the biggest issue comes when things become very tough. If the tenants are not A grade, then it becomes a problem. And typically malls have a mix of tenants. Some are very, very good and some may not be good. So definitely we can look at that, but I think the tenant profile is extremely, extremely important. And
So Sharath Atre is asking, when are you launching the first SM REITs?
So Sharad, presently we are first looking at migrating the existing product into SM REIT. So we are in the process of getting consent from all our investors. So that's going on. Simultaneously, we are looking at various assets. We have assets which we are looking at in Mumbai, Bangalore, and Pune as we speak. So we are hoping that we should be able to launch something within the next 2 to 4 weeks.
So Manish Trayan has asked, could you give a breakup of 17.54% targeted IRR on hBits first exit? Yes. So let me just add a point over here. In this particular property, we had the targeted IRR of 15.54. The breakup was, it was approximately a 9.2% rental yield, and the balance was property appreciation. So that's how we were able to get a good property appreciation in this particular property. Because not only your ROIs are important, your entry price point is equally very important. And that's how we were able to achieve this target IRR. So we have a question from anonymous attendee, which says, when do you plan to start the 10 lakh ticket size investment, and do you deduct TDS while paying the rentals? Well,
So
yeah, please.
So we plan to start the 10 lakh ticket size as soon as we launch our first IPO, first SM REIT IPO, which we are hoping in the next 2 to 3 months. And yeah, in this case, since it's a return of capital, TDS will not be deducted. We are still talking to our tax authorities here, but highly likely that we will not deduct TDS.
So Mr. Ramakrishna Rao asks, if it is a capital redemption, is there a TDS deduction on monthly rentals?
The answer is no.
Manaswi Mahatre is asking, is it regulated by SEBI onwards? So all rules and regulations also for the SM REITs follows.
That is correct, Manasvi.
Yes. How can NRIs invest in SM REITs? Well, just to add in a point, how we've been investing in the fractional ownership. When SM REIT comes into picture, of course, it will be invested. You should have a demat account in place. That's how the investment can be done on the exchange itself. It will be like an IPO.
Yeah, and SEBI has been actually being very proactive in getting foreigners also to invest. So we do expect the rules to be reasonably simple so that non-residents can also invest in SM REITs. There's one question, as a channel partner of hBits, will there be any fees distributed to channel partner if channel partner gets successful allocation for its own clients? Yes, definitely we will be working with channel partners who give anchor orders also definitely will get fees, and we'll have to decide on the fees before the SM REIT IPO.
There's a question, anonymous attendee again. Will all the already leased properties go under one roof in SM REITs, or will be individual ones?
They will be individual ones because there will be different schemes, and because people have invested in different schemes, so we will not be merging that. They will be all individual ones.
Dhanush N asks, what did you mention about the minimum investment in SM REIT was? So it was 10 lakhs. Next to the next question, Mr. Ramakrishna Rao asks, can you share an example of taxation with SM REITs and fractional real estate on regular rental income and final capital return with capital gains? Well,
Sure. Ramakrishnan, what we'll do is we'll send you a separate
lakhs.
email on the same.
Right. Anonymous attendee, what about taxation after liquidation of asset? What's tax on capital appreciation? It's basically LTCG, which will be there. Long-term capital gain tax remains same, 12.5%. Mr. Osman Kaleem asks, once on exchange, if the price of my share fluctuates, how does it affect my IRR calculation, specifically the rental yield part?
Well, if the price falls, then obviously the rental yields go up. So if someone comes in when the price has actually fallen below par, they will actually get a higher rental yield. Similarly, if the price has actually gone up, then the IRR will actually come down.
Bhuvaneshwari C asks, are you considering investments around green energy data centers?
Bhuvaneshwari, yes, we are. The only issue specifically for data centers, they're very large. And sometimes, each data center can be 1,200, 1,500 crores. But definitely we would love to do data centers. But we've not so far come up with an opportunity which we have liked.
So there's a question from anonymous attendee. How is SM REITs different from fractional ownership?
So there are 3 or 4 things which make it very different. One is SM REITs is regulated, fractional was not. Fractional, the minimum size was 25 or 30 lakhs. SM REITs is 10 lakhs. SM REITs, it's listed on the main board exchange. Fractional ownership was not listed on the exchange. SM REITs, the minimum ticket size is 50 crores and the maximum 500 crores. Fractional, you could do any size, but for a private limited company, you could not have more than 200 investors. And finally, the main thing is the tax benefit, which SM REITs has, which fractional ownership did not have.
You mean each year, 8% per annum payment will be a capital redemption when you have a plan to bring IPO of hBits?
So one is, of course, yes, I mean exactly that. What you mentioned, the 8% per annum will be a capital redemption. For the IPO of hBits, one is the SM REIT IPO, which is obviously the property IPO. That we should be getting it in the next 2 to 3 months. The IPO of hBits, which is the holding company, will probably be in 3 to 4 years' time.
What is likely the size of the IPO for first SM REITs?
We're still scouting for properties, but my guess is anything between 200 and 300 crores.
As minimum ticket size will be 10 lakhs, so I assume one share or debenture for 10 lakhs, then how will be operated two debentures in SM REITs if someone has invested 250?
So going forward, we will not take, we will take in multiples of 10 lakh going forward. For the existing ones which we are migrating, we will be talking to SEBI how to tackle this.
Will the REITs listed on BSE or NSE or some other exchange?
One of these exchanges.
Okay. I shall wait for the email for the entire. So yeah, of course, we'll be sharing the email with you, Mr. Vishal. Another thing, and Mr. Ramakrishnan Rao, we'll be surely sharing that with you. Will there be any additional administrative expense for SM REITs compared to fractional ownership investments?
So you as an investor will look at an overall yield which you'll get. And we do think this overall yield will be comparable to what we used to do in fractional commercial investments.
We have one question, and I guess we're about time. So we'll just take one of these questions. Any property coming up in Hyderabad?
We are scouting for it, and we will definitely let you know as and when we are close to finalizing it.
And let's take the last question. Once listed, how will the exit work as the units will trade on the exchange? Just trying to get the right in my head. Thanks.
It's very simple, Swapnil. You will trade it like a stock. So it's like you buy Tata Steel for 10 lakhs and you buy it at say 100 and you sell it at 120. That's how it's going to be, or you sell it at 90. So it's very simple. It's exactly going to be trading like a stock on the main board exchange. The holding period for LTCG is, as per tax rules, it's 1 year.
Perfect. Yeah, so I guess we can just
Osman, definitely, sorry, we'll definitely do it longer. We like to try and keep it short, because people's attention span and don't want to take so much time. But definitely, we'll keep adding more webinars. We plan to do one webinar a week.
So I guess the coming week we'll have the webinar on the topic as we discussed FDs, bonds, and SMREITs because probably they are coming from the same fixed income category. So let's do that. And yeah, thank you, Osman. And any plan to buy a property in Delhi NCR?
Absolutely. We are looking at it. Obviously, if it makes sense, we will buy it. So as I said, we are scouting around properties in the top 4 or 5 major cities. So anything which we get of reasonable size, we will be doing it. We will be acquiring it. And finally, there's a question from Sharath again. Are the rental yields higher in SM REITs compared to fractional real estate? They will be comparable to FRE, but much more tax efficient.
So we have questions coming in. Let's. Sorry, I wanted to paraphrase. I meant exit in terms of the sale of the property. If this cannot be answered now, I understand.
No, we can answer that, Swapnil. So sale of property, obviously, we as asset managers will decide what is the best time to do it. As an asset manager, any asset manager, if we think that the value of the property has gone up substantially, and we do think that we can give a very good IRR to our investor, we would definitely do that. One of the things Swapnil will also be doing is giving the net asset value of the property every year. So based on that, the prices will also move up and down.
Mr. Kannan says, please do share the taxation difference between SM REITs and fractional. Yes, surely we'll do that. Surely. Thank you very much for taking out time this Friday again. It's been a great news again. Just to mention, we received our SEBI license, and it's great news for all the hBits community, investor community. Thank you, Samir, again. Being a part of this. We always required some kind of knowledge coming ahead, and I'll be surely reading out on one particular separately is how Apple shipped the 2 billion thing back before the tariff is going to start.
Thank you so much.
Thank you very much.
Thank you, everyone. Thank you for joining.
Thank you.